Most market sell ideas are framed around fear, panic, or short-term price action. This one isn't. Today's stock is not being discussed because it's collapsing, missing earnings, or facing an immediate crisis. It's being discussed because the valuation no longer makes sense. The stock is Palantir Technologies, ticker PLTR. Palantir has become one of the market's favorite AI stories, but this is exactly where market signals turns cautious. The first issue is valuation. Palantir trades at a price-to-earnings multiple that assumes years of flawless execution, sustained growth, and continued enthusiasm around artificial intelligence. That's a very high bar for any company, especially one whose revenue growth is not accelerating at the pace the valuation implies. High multiples don't automatically mean a stock must fall, but they do mean there is very little room for disappointment. And in markets, disappointment doesn't have to come from bad news. Sometimes it comes simply from reality not matching expectations. The second issue is the business model. Despite the AI branding, Palantir remains heavily reliant on government contracts. That concentration creates risk. Government spending is cyclical, political, and unpredictable. Contract delays, budget negotiations, or changes in priorities can all impact revenue, often with little warning. This isn't a diversified enterprise software company with thousands of commercial clients. It's a company still closely tied to a narrow customer base. That makes the stock more fragile than the hype suggests. The third issue is narrative versus fundamentals. Right now, Palantir is being treated as a pure AI play. The stock is moving less on earnings power and more on storytelling. That works until it doesn't. Markets tend to overshoot when a theme is popular. AI is popular. Palantir is associated with AI, and that association has been rewarded aggressively. But hype-driven moves tend to reverse faster than fundamental ones. The fourth issue is management perception. Leadership matters for long-term investors. Confidence is good. Discipline is better. When a CEO projects arrogance or dismissiveness toward critics, markets tolerate it during bull phases. But sentiment can shift quickly. When expectations are extreme, tone matters more, not less. Arrogance does not break a business, but it can amplify downside when the narrative turns. This doesn't mean Palantir is a bad company. It means the stock has moved ahead of itself. So let's be clear about what this is, and what it is not. This is not a call that Palantir will crash tomorrow. This is not a short thesis based on technicals. This is not a prediction of bad earnings. This is a risk management decision. At current valuation levels, Palantir is priced for perfection. When a stock is priced that way, the smartest move is often not to chase, but to step aside. Selling or trimming here isn't about being bearish on AI. It's about being realistic about expectations, concentration risk, and valuation discipline. Sometimes the strongest market signal isn't momentum, it's excess. This is market signals. Thanks for watching.